Okay, what I want to talk to you today about is how your guru is all wrong about LLCs or limited liability corporations. So, in the past few weeks on social media, I have seen some of the most ridiculous posts I've ever seen from supposed gurus and influencers and experts about LLC. There's a lot of people out there promoting this idea that if you have a business, you should immediately form an LLC in order to operate your business and take advantage of all kinds of things. So some of the headlines I've seen that I want to walk you through and why I think these are just terrible recommendations are here's one I read: a few lenders that loan money to LLCs. Well, let's just go ahead and jump into that one, then I'll get to the other ones because that's ludicrous. Guess what, guys? Every single lender out there will do a loan to an LLC. Why? Because they don't really care about what legal entity your company is. A loan, if you watched my channel for any period of time, is all about proving the ability to repay a loan, which means you have to have revenue or personal income that you can show, or some collateral as a secondary source of repayment, or something like that. So just because you have an LLC has nothing to do with getting a business loan. Now, that an LLC, that type of legal entity, has cash flow that flows different ways, but every lender out there will give you a loan if you're an LLC. Really, it all depends on everything else, not the type of legal entity that you're using. So that's just absolutely ludicrous. Another one I saw recently was a gentleman who was talking about how to layer multiple LLCs to avoid any type of personal liability. Now, an LLC, a limited liability corporation, is called that for a reason, right? I just told you why it was called that, a limited liability corporation. The idea of that type of particular legal structure is that it is supposed to shield the owners of the business from liability. But with this particular influencer's recommendation, when I watched him run through it, he had eight, eight, eight different limited liability corporations he had set up for one particular business in order to shield himself from all liability. Well, guys, one of the things you're not thinking about is that every single one of those entities has a cost associated with them. You have to pay to form them, whether you pay an attorney to do it or you use LegalZoom or some other type of service, it's still going to cost you money to form that LLC. Then, depending on the state you're in, you have to pay taxes, certain types of taxes. So I live in Tennessee. Every business has a franchise and excise tax they have to pay every year. And even if you just pay the minimum, that's $100. So for every one of those LLCs, you're going to pay $100 every single year in franchise and excise tax. And so then you have to think about filing a tax return. Are you going to do that yourself? Are you going to pay an accountant to do it? There are all these costs that come with any type of legal entity, whether it's a C Corp or something like that. So you need to think about overly complex types of structures and how they can get expensive in order to do business. Even if you just have one LLC, you're going to have some costs associated with that. And so I always recommend people wait to form a corporation until they're generating significant sums of income. So I generally recommend somewhere around $30,000 to $50,000 per year before you start thinking about all these complex things and all these reasons to have an LLC. One more thing about this layering thing. There's an even cheaper way to protect yourself. How can you do that? Through buying a general liability policy, especially if you're just in consulting. General liability policies, I have had $1 million worth of protection before, which is more than most people really need, for $350 a year, right? So pretty inexpensive and probably less expensive than managing 8 different layered LLCs just to avoid liability. So the last one I want to talk about is another one around lending. This one was the one that made me smile the most. How to instantly get $50,000 to $100,000 loan when you form an LLC. Well, let's go back to what I talked about in the beginning. A lender could care less if you have an LLC or not. You could even get a business loan as a sole proprietorship, meaning you haven't even formed a legal entity. You're doing business under your social security number, right? And on top of that, this influencer's tag, this headline implies that just because you form a company, you're gonna get $50,000. What a joke, guys. Stop taking your advice from these so-called gurus and influencers who do not have much experience whatsoever in the real business world. Now, do I share content with you? I do. Do I consider myself a guru or an influencer? Absolutely not. But it just so happens that I've been a former C-level bank executive. So in the C-suite, chief lending officer, and I was actually supposed to be a CEO of one financial institution and chose not to be. On top of that, I've been a 3-time startup founder. On top of that, I've ran family businesses. So, guys, do I have a knowledge set to share with you around these things? I do. Do I think I'm the only one that's right about these things? No, I do not. As a matter of fact, some of the so called influencers I have watched talking about LLCs do a fine job. There are reasons to incorporate, to legally incorporate a business. Can you take advantage of tax deductions? Sure, you can. Here's another problem with that. I see influencers saying, oh, form an LLC so you can get all these tax write offs. Well, I want you to stop and think about that for a minute. There are some tax write offs that are dollar for dollar. What do I mean? You can write something off as an expense and it reduces your tax liability by the exact amount of that write off. However, call your accountant or talk to someone who knows this. They're going to agree with me because I have a minor in accounting. Not every tax deduction is a dollar for dollar. Why? If you go out to eat and you write off that meal as a business expense, guess what's going to happen? It's going to reduce your taxable income by the $100 that you went out to eat. But you're not really saving $100. What you're saving is the tax on that $100. So then you have to think about the tax bracket that your business or you are in, depending on how your legal entity flows. If you're in a 20% tax bracket and you go out to eat for $100 and write that off as a deduction, you're not saving $100. You're saving $20. Okay. You're saving that $20 taxable amount. So really, you still spent $80. For a lot of people, this is like going out shopping and saying, oh, it was on sale for 50%. So I saved money. No, you didn't. You still spent money. You just happened to save 50% of what you spent. So I want you to stop thinking about LLCs and following all these people's recommendations without really understanding what it means for yourself. As a matter of fact, anything I say that you listen to, anything someone else says on the internet that you listen to, you should dig in and find out if it's true for yourself. If you're just taking people 100% at their word, then you're probably getting some really bad advice. I'm really passionate about this, so I apologize for just being a little forward today, but I'm tired of people following advice of folks who really don't have experience in what they're talking about. The best example for me was a few lenders that loan money to LLCs. What a joke. That person just, they don't even need to be giving advice at all. So stop taking advice from the wrong people. Even when you take advice from people, make sure you understand the topic yourself. And if you can't understand it, find someone qualified to help you understand it. Hope you guys have a great day. Until next time, see you later.